Good afternoon. Well, good morning, good afternoon, depending on where you are. Welcome back for another edition of our financial seminar. I'm very, very excited about this portion. Very excited for the guests that we have lined up for this session. Looking forward to bringing them in. I hope you guys have been tuning in all week. Our pastor last night was phenomenal. Pretty much every speaker we've had this week, I'm not even gonna lie to you, every speaker we've had this week has been absolutely phenomenal. We've heard some amazing feedback from those of you who have tuned in throughout the week. We've heard excellent feedback. I promise you, today will not fall short of everything that you have been hearing and everything that you've been able to take in. I will say this, let me go ahead and throw this out there. Get your notepad ready. Listen, get your notepad ready. The information that is about to get dropped in your lap today is priceless. I promise you, it's priceless. So make sure you get your pen and paper ready. Without further ado, I will go ahead and bring on our crew. Listen, I'm telling you right now, the first I gotta shout out. I love everybody on the crew, but I gotta show love to Clarence Graham. Uh, Listen, Clarence is my guy. When it comes to real estate, I promise you, he's a wealth of knowledge, and I don't doubt that Ebb is in the same vein. I know they are a tag team duo, and everything they do it together. But I gotta say, Clarence and I have conversations for days
Yes.
about all aspects of real estate, and he is truly a wealth of knowledge. I gotta, my
Thank
bad,
you, man.
I gotta
Thank you.
take that time to show love, Clarence.
Thank you.
Special relationship. Clarence is the realtor
I
for all the
appreciate it.
people. I'm telling you.
Thank
And
you, man.
Ebb and Clarence do this together. I love to see that dynamic duo. Because for men, we see things differently. My mom always says it. The wife, she's always gonna have a different eye for different things. And so you
Mhm.
two being lined up like that, that's why you just excel in everything you do because you can't miss it. When you got eyes like that, you
Right.
can't miss it on any level. So you all are phenomenal at what you do. 15 years of
Thank you.
experience in the game. I mean, listen, I love y'all. I love y'all. Damien and I just met a couple weeks ago, maybe a month or so ago. Damien knows his stuff. Damien knows his stuff. Mortgage
Mhm.
production manager for Regions Bank. He knows his stuff. I mean, you catch him, he's on the go, but you get him, he'll give you everything you need to know. He's gonna give you line by line, item by item. He can break it down
Right.
for you. So trust me, I'm giving you guys a short version because I know these people, and I know the wealth of knowledge that they have. So I want to stop talking and go ahead and kick it off to you guys. To go ahead and just open up the floor and take it in whatever direction you see fit today.
Well, good. We want to thank y'all too for definitely having us today. And again, light up the chat box. We want to answer a lot of questions. We definitely want you to leave with value today. That's highly important for us. So, don't be afraid to ask any questions. That's the purpose of this today. So thank y'all too, George and Pastor and everyone for allowing us to be here. We're excited to
Yes,
add
thank
some
you.
value, man.
Yes. Yep.
So why home ownership? I guess that's what we start out, right? So everybody
Absolutely, that's what everybody want to know.
Right. So why home ownership? And Evan, you can talk. Dame, you can talk some again. Why do you guys think that's important? And I'll tell mine as well.
Now, let me say this before y'all jump in. I want to make
Yep.
sure that everybody knows this. We're covering home ownership from every aspect,
Right.
not just the first-time home buyer, investor. If you're looking to get into in the investment game from rental properties or just flip properties, or even if you're looking to move up from house one to house two, like this, we're covering all aspects of that. I want to make sure everybody knows that so they don't just tune out like, oh, first-time home buyer, I'm already good on that.
Right.
Right. Thank you. Thank you.
Yeah.
Well,
No.
for me, go ahead, Damon.
No. Go ahead. Go ahead.
Well, I was just gonna say, for me, real estate as a whole, whether you're a first-time home buyer, if you're a step-up buyer, if you're looking to invest, it's just a part of creating wealth for yourself, for your family, for generations beyond that. So real estate is just so important. Whether even if it's land, commercial, multifamily, just the whole gamut is such. It has to be, it doesn't have to be, but it kind of has to be a part of your wealth portfolio. And so I think that's one of the reasons that we fell in love with real estate. We're in all aspects of it. We buy everything. so, but we use it as a tool to create what we hope will be generational wealth for our family. So.
Yeah, and first of all, I have to say thank you, George, and Pastor, for allowing me to be here. I'd have to echo the same thing and amplify the same thing that Ebony has stated: is that it has to be the cornerstone. I've been blessed to do this for over 20 years, right? And so I know Clarence and Ebony have seen the same thing, where people have bought property, whether you're an investor, you're a first-time home buyer. 5 years later, they're turning around and selling that house and pocketing equity.
Yes.
The difference of what they sold and what they bought it for $100,000, starting
Right.
businesses, sending kids to college.
Yes.
Again, home ownership, investing in property has to be the cornerstone. It's one of those those bellwether things that, Americans, that's what we do. One of the things that I always have to step back and ask, why do I do this? Again, I've seen how it's transformed communities, how it's transformed families. They said that there was a Brookings Institute study that basically said 1% of the businesses that are owned in this country are owned by minorities, right? 1%, right? So when you start thinking about what that does in terms of minorities owning land, using that to start businesses, just imagine the amount of equity. And I know Clarence is going to talk about some statistics, the disparity of home ownership rates in certain communities. It's not an opinion. These are facts. That dollars move this economy. And so when you start thinking about what wealth and home ownership and using that as a cornerstone, you can start businesses again, sending kids to college. What that does and how that transforms a community cannot be missed. So that's why I do it. I'm in banking. I can do several things in banking. I've been doing this for several years, but I'll tell you, mortgage financing and dealing with professionals like Clarence and Ebony is what I love to do. So again, excited to be here and excited to share.
Definitely. And so it's a huge gap still, even for us as a community. So when they looked at back in 2022, they 74% I'll say, white people owned homes compared to still with us. I think we're in the 46 and some change percent of African Americans that own homes. So that's a major gap that we're still missing. And if you look at the wealth gap and you have the two top, I would say, people that have wealth, it says Asian and white. And so we're literally still the last on that totem pole. Even Hispanics have outgrown African Americans in some areas when we're talking about wealth. And so it's important that you use this as a tool, right? And I think we'll talk more about really affordability, is that we have to watch also not buying too much house where you don't have surplus money to do other things and invest outside of just owning a home. So, not only just owning a home, but understanding how to buy the home correctly. And we're going to answer a question here, but also making sure you don't get yourself into a payment that's too much, trying to, make sure you graduate this thing. If you're buying your first home, get a home that you can enter in. It don't have to be perfect. It's not going to be everything you want. And then roll that equity to the next property, and then roll that equity to the next property. And, it's the process. And so that's what we really want to educate people about as well.
Hey, Clarence, I just what you were saying about the home ownership rate, again, just to kind of color that a little bit, essentially prior to the Fair Housing Act of 1968, 4 out of 10 African Americans own homes. That's 4, right? You line them up, four people own homes. Fast forward to 2022, 4 out of 10 African Americans still own homes. And that's after the Fair Housing Act of 1968, which outlawed racial disparity and allowing minorities to purchase in certain areas. So why does that matter, right? I mean, I feel like personally, if you just ask me on the street, do I see more Black people owning homes or minorities owning homes? I would say yes, but the facts just don't bear it out, right? So that's why it's still important. That's why I applaud you all, George and Pastor, is making sure that you're talking about these things, because there are different ways to own property, which,
Yes.
Clarence and Ebony will talk about, is not just being a first-time home buyer, using that property to flip and, buy one and renting it out. So it's more than just one way. So just wanted to kind of color that a little bit more, Clarence, just
Definitely.
to
Thank you.
home a little bit.
Definitely.
Clarence, I think it was a question.
Well, I
Yes.
wanted to ask a question right there.
Yep.
In Damien, what you were just saying, I guess everybody can kind of pour in on it. But you see different agencies, banking institutions, kind of get in trouble. I know we've seen a few get in trouble over the last couple of years because they find ways to kind of exclude the African American race from being able to get these loans. So, what would be your advice to kind of, I don't know, what's your workaround with that?
Again, it's just, I don't want to sound kind of general and mundane. I'd say it's just the information. I think it's incumbent upon us that are in these fields, in the financial fields. We have to do better jobs as minorities in banking to get the message out.
Gotcha.
Ebony and Clarence we all have to do a better
That's right.
job making sure that we're getting the message out about how to purchase. I hear people all the time saying, look, I'll just rent. I don't want to buy right now. And they're using misinformation. So again, to your question about banks, what can banks do? We have to just push. We just got to continue pushing. I think, again, the voices are louder now, in the last 5 to 10 years on this disparity. So I think we just got to continue to push. And there are certain banks that have tools that I will say that kind of help our community more, certain products. So education, understanding what those products are. There's some gray areas that, first-time homeowners getting no money down, getting down payment assistance, finding where the money's at. A lot of banks have this, right? You'll still be amazed. I'm talking to a gentleman, he works for the bank, great guy, first-time home buyer. He still thinks he has to put 30% down. And he's educated young man. So again, that's not on him, that's on us, right? So that's it's education, but it's also making sure that banks are being held accountable for that type of lending. So CRA, which again, I don't want to get into all the the details, but banks are held accountable for how they're lending. If we're taking deposits from a community, we have to be lending in that community. So we're graded on that. So all banks are graded. And a lot of times those grades are public. You can see that. So good question, man.
Real quick too, I want to add to that too, and also make sure at home, for those who are parents, make sure that you're pushing kids to come out and prepare them for home ownership while they're at home or in college, and not suggest renting, right? So now we're seeing some parents encourage kids at 21, 22 to immediately leave the house and go straight into owning a home instead of going to a rent. And based on now with rent, the other day I have some people I'm helping, 1 bedroom, 1 bath, Hoover, an apartment, $1,400 a month.
Wow.
Right.
Like no equity return on that. The buying power. Now you may have to choose another area to stay within budget, but you own the home. It's important that we understand that concept. So somebody, they're asking some questions. Great questions too. It's good.
I'm gonna let y'all get into your points, but I know I got 3 questions off top, so I'll start with this one.
Okay.
The first one says, what would you say are the top 3 things to prepare and be in a position to buy a home?
Great question. Who want to take it first?
I'll take a stab at number one. If before you decide to jump in there, and I think, Clarence, you're talking about payment, et cetera, I think to be able to own the process, know what you want to pay per month. Okay, what's your budget? Some people say, look, I'm watching HDTV. I want to buy this $350,000 house, but I want my payment to be $900 a month, right? You need to know what that number is, George. I think you really need to know what that is before you even jump out there. Okay. So I think that's the first thing. For me, I always tell when people walk into my office, what do you want to pay? Well, what can I qualify for? No, what do you want to pay? Because when we all walk away from the closing table, you're going to be making that payment. So we want to use that as kind of a baseline. You may not stick directly to that, but that's a baseline. of what a cornerstone of what you'll need before you get out there and decide you're ready to buy.
So I'll take a stab at the next one. Or Evan, you go if you want to go ahead and answer, and I'll tell you the next one. I think.
Well, I was going to say, I think what's kind of the obviously, is, your credit, and the cash that you have to have on hand. And I know Damien can speak to that. I never try to give I like to deal with Damien because he gives people the real. And so when I'm dealing with clients and we're using Damien, I'll say, ask him, what kind of money do you really need? Because a lot of times people will think, well, I heard that this program is 100% financing, and that means I don't need any money.
Right.
No, you still need some money. You still have to have some cash. And I've actually had people where they did, found out later that they needed more than what they initially thought, and ended up not being able to purchase and had to push their process back. So I think those two are important to understand as well, that you do have to have some cash. You might not have to, you don't have to have the 20% and all of that, but you do have to have some, and your credit score, depending on your lender. But your lender will tell you, what that credit score needs to be. But that's something, if you don't have a good credit score, it's something you need to be working on.
Yep. And I'm gonna just say, go ahead, and if you're looking to buy a home, get your team together. So, and I'm not saying that as a sale. I don't care who it is. Make sure you have a really great team, that person you can go to, and that's going to tell you the truth and help you with direction, right? So even if you're going to know how much credit and how much cash, coming down and sitting and talking to a consultant, because a lot of times what people do is talk themselves out of it, where it's like, well, I know my credit isn't good enough to buy a home, so I'm just going to wait. Or I know I don't have enough cash to buy a home, so I'm just going to wait. Take action. It doesn't cost you anything to sit with a professional, really. What I'm saying, like a real estate agent or a lender, to discuss these things, to say, go ahead and pull my credit. Let me really see where I'm at from a lender's perspective, not my own education, right? So stop limiting yourself, because a lot of you can buy a home right now probably, and you've talked yourself out of it, that you really could qualify today, or you are already in position, or will be in 6 months, and you're going to wait another 2 years if you keep telling yourself it's not the time right now. So
right. And there are several people that we have worked with for years. They weren't ready. And so we kept following up with them. We kept making sure that they were getting the information that they needed. We made sure that they were, moving in the direction that they needed to move in to meet their goals. And, it might take a year, might take 2 years. We have stuck with people for that amount of time, until they were ready to purchase. So that's a really good point.
All right, I'll ask one more question for now, and then I'm gonna let you guys. I want you to kind of work within the presentation of things you kind of have outlined, and then we'll kind of revisit some questions at the end. I don't want to, keep you from doing that. But here's the second question. How do you ensure you're getting the best mortgage rate when you are a highly qualified buyer, excellent scores, and low debt?
I'm gonna let Damien roll with that one.
That's a good question. I think. And who asked that question? Was it
Alicia?
So I think that's always a question if you don't do this all the time, right? You're like, am I really getting a good deal? Clarence and Ebony will echo the same sentiment. Yeah, I want you to sit down and let's talk about what you want to pay, look at your credit, all that. But I always tell people it's okay to look at another bank. Look at 2 or 3 options, just so you can kind of get a sense of, okay, am I getting the best deal? If you're with a good team, to Clarence's point, they're gonna tell you that. A good lender will tell you, hey, this is what we offer. Here's kind of the nuance. Maybe we have first-time home buyer program, no money down, or here's our rates. These are what the rates are as of today. A good lender does not care if you're looking at another lender, because we're going to be able to stand by what we can offer, right? So again, that's kind of the simple answer. I think it still boils down to what team you have, a good team. But I always say check 2 or 3 lenders. And then also Google's your friend, check, CNN Money to kind of see what the national rates are. But you always got to look at the fine print when you're looking online, because a lot of times that's 20% down. If you're planning on putting 20% down, that's usually a good gauge. But a lot of times that's with somebody with a very high score, as this young lady's saying she has. But it also is 20% down, a certain sales price, loan amount, So you got to be careful when you're looking online. So you want to make sure you have your question lined up. Hey, my credit score is this. I talked to this lender. They said my score is this. Says I qualify for this. This is my income. What can you offer me at the next, if you're talking to the next bank or the next lender? So that's the short answer.
Okay.
And I'll just back up what Damien's saying too. Also, don't just pay attention to rate. You also have to pay attention to the costs and fees that are being charged, because a lot of people can give you a low rate, but you may be paying high closing costs, which really is a higher rate when you take the true average of what the money costs. So that's why it's important, like a great professional, like I said, to sit down. And that's a good, that's a great team member is going to explain that to you. They're just not going to let you look at the rate, but you're paying a lot of, several $1,000s worth of extra closing costs to get that rate. You're really not getting a low rate, so just make sure you're paying attention to the total when you're asking for it. The document that you want is the closing disclosure or a HUD-1. So if anybody want to write that down, if you're going to shop rates, is that right, Damien? You want to look for the HUD-1, and they're going to give you a sheet, and Damien can explain the correct terminology you ask for, but make sure you get these two things.
I know you've been in the business for over 15 years, because we still call them HUD-1s.
I try to say closing disclosure.
Yeah, they call them closing disclosure, like you said, but the one where they're actually looking at before they actually lock into a deal is a loan estimate. So it's still hard for me to kind of get that in my brain as well, but it's called the technical document that you want to write down, that you want to compare bank 1, bank 2, and bank 3 is a loan estimate. And to Clarence's point, it will have what they call the annual percentage rate. So you may be getting a low rate with bank 1, but the annual percentage rate is higher with bank 1 too, because that means they have more fees. So the APR is something you want to look at, and you want to get a loan estimate that has that APR on it. That's kind of what Clarence was talking about.
And then you can compare the real loan estimates to make the best decision which rate is best for you.
That's exactly right.
Okay. All right. I'm a pause. I'm a pause on questions. So, everybody in the chat, by all means, please keep dropping questions. I'll work my way back through them. But I do want to allow them to kind of explore the setup and the presentation that they have. So keep dropping questions, but I'm gonna let them kind of take the show.
Y'all dropped some great questions too in the chat. Comment like, golly.
Damien, you got some fans in the chat too.
Right.
I keep seeing Damien's name. Damien, you got
he always get fans.
You feel me? So everything you do in the bank side, because you got fans, my guy.
Appreciate it. I appreciate it, man. I love what I do, so I appreciate that.
For sure, it shows. It shows.
So let's jump to. We can get right into the like the funding. Like, Damien, we kind of was talking. You guys really answered some of the questions already. We were kind of going to go over, but really understanding the different products. So I think a lot of times, people think they have to have 20% down. They think they got to have a 700 credit score. So we can talk about first how to get the money, the different products, and then we'll roll into the process a little bit, and we can just start there if that's okay.
All right.
You want me to start talking about a few products?
So just talking about really, because what's the base score? A lot of times people are afraid of credit. They think they have to have perfect credit. Like what options do they have?
I think that's a great start, man, because I get a lot of people. I get several people say, "Hey, man, I'm waiting for my score to go higher," and they've got a 720 credit score. So just so people know, most banks and companies, if you wanted to use a barometer, I would say a low credit score is 620. Okay, that's kind of what I would use as that's your barometer. But I'm not saying that's where banks stop. A lot of lenders go below 600, right? Where that becomes a concern for most people is the lower the score, the less the opportunity for different products that you can be offered, right? The higher the score, the more products, the more options that you have, right? So that's where I'll start. We'll talk a little bit about, and I'll kind of assign when you hear credit score for FHA for investor loans. FHA is it's not a first-time homebuyer program, but it's backed by the federal government. It's FHA. It's 3.5% down. That, for example, your score can be as low as 500 on that one, right? Conventional products, portfolio products that the banks have. And again, I don't want to sound too wonky here, but You really want to be around the 620 is what I always tell people if you want to have your best options for some of the down payment assistance programs, no money down, etc. And most banks, small regional banks in this area, in the Southeast, usually are anywhere between 620 and 640. You get up above 700, man, the sky's the limit in terms of the type of products that you can be offered and the amount down. Clarence, I think that without going too deep into it, usually when I start talking about credit, 1,000 questions come up. So everybody has a score, right? So we all want to know, what can my score get me? So I try to back up a little bit and let people know that there is a product for everybody, and that if you want to get a higher score, there's certain things that you can do to get those scores up to give you more opportunity. So I try to leave it there.
No, that's real good. And I want that because I want to echo to people, like, you can have a 620, meaning that's not, like, that's still a good score. You can qualify for a home. And like Daniel was saying, some lenders will go as low as in the 600s, or, but again, you might have to put money down at that point. That's what he's trying to explain. Once you go lower in score, and you got to think it's risk management, right? So it's always saying, if my cousin I've loaned $100 to pay me back every single time, I'm probably not going to ask for anything. But if every time I've loaned him $100, I'm going to tell them, I need you to leave your car keys here because the last time you didn't pay me, right? So it's the same thing. Just think of it in that same format. It's like, okay, the more risk we have to take, the more the more skin we want you to have in this game, in the investment. And so, but it's still an opportunity there, right? So it's about getting with the team so you can really say, even if you have a 580 and it's going to cost you $6,000 to get a down payment, right? We can still put you with a good person to help you with your budget, find ways to save some money. It might take 6-7 months, but if you're really focused at owning a home, it's available to you with no problem at all. That's the truth. Like, it is available. It is not hard. Banks, they want to lend. That's what they're looking to do, is lend money.
Absolutely.
You just have to apply for it. And don't be afraid of if you are denied at that point in time, it's not a no. It's just not right now. And I think that's what stops a lot of people. They're afraid of even going to apply or talking with anyone, because they're afraid of the rejection or being denied of the loan. But the bank wants to lend you the money. They just telling you, go back and do these things and we will give you the money.
Right. That's right.
And most good lenders will tell you exactly what you need to do. They'll tell you, they'll list it out for you and let you know, you get your credit score up to this, pay this off, do these things, and then come back and you'll probably qualify. So a good lender will let you know what needs to happen to get you where you want to be.
Yeah, good pro tip that I always tell people, team, is before you go to your lender, pay your credit cards if you can. Again, if you have the ability, pay them down below 30%. So what that looks like, if you have a $1,000 limit, and today that you're at $900 balance, you want to make sure that you get that below $300. Why? Because that typically will increase your scores 20 to 30%. Because your credit score is a moment in time. It's not, it literally is a moment in time. So when we pull the credit does matter. So I've seen scores go from 630 to 680, 690 with just getting that down to 30%. That's if you're buying a car, if you're getting a credit card, before you apply for anything, if you can do that, get it below 30%. So that's the last thing I'll say on the credit piece.
No, and that's good too. And also adding, understand your credit reporting date on the credit card too. Because if your credit card reports on the 17th of the month, so you can call your credit card company and say, what day do you report my credit history to the bureau, right? Well, if it's on the 15th, you can pay that off on the 13th. Your score will show an impact. But if you pay it off on the 16th and it already had reported on the 15th, you're going to have to wait another cycle before that will hit the credit report. So don't look and say, well, I paid it off, my credit never jumped. My credit didn't increase. If you miss that payment date or the cutoff date that they report, that it won't reflect into the next time.
That's right.
So stay on top of that too. If you're a person that uses your credit card to pay bills, make sure you're always paying that balance off before the actual recorded reporting date. They'll never know what the balance was on your credit report if it never gets reported, if you're paying it off before the actual reporting date. So that's just a little nugget, I'm telling you, that'll keep their score up at all times.
See, these are things I didn't learn these growing up. I had to learn these by being in the industry. So Ebony, they have 2 kids. I have 3. my kids, I'm teaching them this stuff. So the stuff that you're hearing from Ebony and myself, tell your kids.
Definitely.
They're listening. They're
Yeah.
listening, and that sets them apart as soon as they come out the gate.
Yeah.
And
I
even
learned how
talking
to
about
swipe in
home
the car.
ownership with your kids now,
Mhm.
like I don't know if we've ever even if we've discussed any. My kids probably don't even know what renting is, honestly, because they've never experienced it, and they know what an investment property is. They know what a flip is because they go to them and they see them, and so those actions and them seeing you, um, utilize real estate is also important. They're watching.
Definitely.
Hey, George, was there anything along those lines in the chat? Any questions along the lines of credit that we can knock out before we jump forward here?
Not really direct questions. I think they just kind of appreciated the information. I saw one question that asked about the reporting date, and what Clarence was saying was the reporting date that that particular credit card reports to their agencies as far as what you're carrying on that card. So he's saying make sure you know when that reporting date is, so you can go ahead and pay off whatever you were carrying, so that once it reports at a zero balance. Correct.
Correct.
Mhm.
Correct. Even if 3 days ago you had a $5,000 amount on there, you paid it off, it would never show on there as long as you make that cutoff date. If you pay it,
Gotcha.
and do it a couple days in advance. Don't, if it reports on the 15th, go ahead and do it on the 12th, the 11th, because you have to give a time, for it to report, and don't do it the day before you may get caught. So,
Damien, I did see someone ask about VA loan. I don't know where that question went, but I did see that pop up
Okay.
while we're talking about
Let
lending.
me jump in, if I can just use that now just to kind of talk about a few different products. But I'll start out with VA loans. VA loans, if you are a veteran, if you're in the military currently, serving in the military currently, or you're a widow of a veteran, you can get a VA loan. I always tell people VA loans are, to me, those are pretty much the best loans out there if you're a veteran. I mean, and rightfully so. People that have served in the military should get the best opportunity. The reason why is when you break down a mortgage payment, and again, I'm gonna get a little bit wonky here for a second, but when you break down a mortgage payment, it's principal and interest, just like you have on a car loan. You have taxes, property taxes, homeowners insurance in your payment, monthly homeowner insurance in your payment, and what they call private mortgage insurance. VA loans, because they're backed by the VA, have the lowest credits or lowest rates out there. Okay, so that's number one. Number two, you have no down payment. Doesn't mean there's no cost, to Ebony's point earlier. There is closing costs that we have to deal with, but there is no down payment. And the last part is that there's no mortgage insurance. So again, principal and interest, property taxes in your payment, homeowners insurance, and typically there's another $150, $200 at times mortgage insurance that benefits the bank, doesn't benefit you in the event that you foreclose. VA does not have that extra cost. So those three things are the reason why VA loans are to me, if you're a veteran, that's the best route to go. And the one caveat that I'll say, because people will ask this as a follow-up question, is that it has to be a veteran and their spouse. It can't be a veteran and auntie. It can't be veteran and girlfriend. It's got to be married or your widow, or it's got to be the veteran by themselves. So that's just a note. So just kind of cascading down, FHA, people will usually ask about FHA. Why do people do FHA? FHA is a great product because it's very liberal in credit score. The rates are low because it's backed by the federal government, Federal Housing Administration. So rates today on a FHA loan, and Clarence and Ebony, I don't know if you know, but these rates have gotten below 5% again on these government loans. So that's a stark difference from just about a month ago when rates were almost a point higher. So great because they're backed by the federal government, but in the FHA loan versus the VA, you have to put 3.5% down. So again, $100,000 loan, you have to put at least $3,500 down. And it does have that mortgage insurance that I was telling you that VA does not have. You have that with FHA. Okay, so it's a great product if you're trying to get in. You don't have to be a first-time home buyer. A lot of people say, I'm a first-time home buyer, I have to get FHA. You don't have that. You don't have to be a first-time home buyer. So I'll pause and let Clarence and Ebony if they wanted to add something there. But those are two government-backed loans that people like to use.
No, both are great.
Okay.
And I think the other thing I would say, if any, and again, we want you to work with us, of course, always. But Damien, we can also talk about too, when you're going to an institute, make sure you're asking about what they call overlays. And I don't want to be too techie, but I want you to know this. It's very simple. So when you're going to an institution, even if you're not working with us, and you say, hey, does your bank direct lend, meaning you don't have other restrictions you will put, because that's why sometimes you can go to one place and they'll deny you, but then you'll go to another place and you get approved, and you're like, how did that happen? Where certain banks in certain places have additional guidelines they will add to what they quote unquote shouldn't have had, right? And they should have, because it's their money. But I'm just saying, some lenders, they lend exactly the way the government that's backing the loan says to lend, and they're not adding other things on, like, well, if you were a kid, if you were a student, you couldn't have X amount of payments for the past 10 months. I'm just making some up. Like, they would add other things and other restrictions, which Damien can speak more on. But ask that question if you're going to the lender.
Mm-hmm. Yeah. To Clarence's point, I'd say when you're talking to a lender, people say the lender, a broker, a big bank, we all pretty much lend the same type of, we all have this pretty much the same loan. So there are some nuances where, when I look at debt to income ratio, what can somebody qualify for? So let's say we may have a max of 45% of your total debt, your credit card, your mortgage payment can be no higher than 45%. There are some lenders that say it's no higher than 36%. So it brings down what you qualify for. So you may talk to one lender, to Clarence's point, that says, hey, we can qualify you, but you can only qualify for 100,000. You go to another lender and say, no, same profile, you may qualify for 150,000. Those are what they call overlays. So most banks have them, but a lot of them don't. We don't have overlays. If we send it through the system and it approves it, that is what it is. A few other things, so we're not going too deep into products. I just want to kind of throw these out there that most banks have. So we've talked about VA, FHA, USDA loans, which is urban development. It's USDA. It's a kind of a rural development loan. So if George, are most people in the Alabama area?
Yeah.
So if you can think about places like Calera, Pinson, going out towards Pell City, there are products that are specifically zoned. Pleasant Grove is one. Outskirts of Pleasant Grove.
Parts of McCalla. I know McCalla has some too.
Yeah, parts of McCalla. So some places will surprise you, but it's a great product. No down payment. Credit score 620. Okay, low rates because it's backed by, again, a federal agency. So it's a great product. It's 100% financing. So USDA is another product. Real quickly, two other things. One of the things that Clarence will tell you to do when you're talking to your lender, ask about their portfolio loans. If you can fall into a portfolio loan, what does that mean to you as a general public? Well, banks, if you go to a bank has the normal products that we're talking about here. Then they have loans that they just have in-house. Several different banks have those in-house products where there may be a down payment assistance. It may mirror USDA or VA, but it's a personal product. You go to this out on the street to a regular broker, sometimes they may not have those products. So it's important that you ask. The one thing that Clarence will tell you when he asks if they have a portfolio product, because it may fit your situation, right? Correct. And then the last piece that I'll talk about is just your regular conventional loans, where people think about the 20% that our grandmother, my mom has gotten. Those products are there. Most lenders have that. Those are not portfolio. Most all lenders have that. Most all lenders have VA. Most all lenders have USDA, and most lenders have VA. Ask about portfolio products because it may, if you're an aspiring nurse, teacher, if you're in those fields, there may be certain products that are geared towards your profession. So again, I don't want to go too deep there, but if there's some questions on that, I just want to kind of throw that out there to make sure that people know.
Definitely.
Ask about the different products for your situation and if there's portfolio products out there. Clarence, you want to add anything there?
Yeah, I just real quick, and George, so because even Peg was saying that's a lot of it's a great, but it's not a lot. It is a lot, but that's the beauty of having a team. We're explaining things to make sure we're covering a broad audience, but a lot of times when you're coming, you literally your agent and lender is sitting there with you, basically walking and holding your hand. You're not having to figure this stuff out. Your lender is you coming to us saying, my credit, here's what my credit is. I don't have no money. I don't want to pay no more than this per month. This is where I want to live. And we like, okay, got it. So based on that, that's going to be here. We're going over to this bank because I already know that situation fits you here. So we're going to make sure that you're here because that fits the situation. Oh, you have a couple grand down? We can go to this bank because now you can go and buy bigger. And now you can go over here and we can go to this side. So it's just depending on, who you're working with. But we always do a consultation where we're going to sit down and do a needs analysis and get you to tell us what you need. And then our job is to go make that happen for you. That's how that works. So again, we're just trying to give a lot of information for the call because we can't guarantee everyone's going to call one of us. And we're not saying that. Right. That's not what this is about. So we want to just share information, but we understand you choose whoever you want to. We want you educated to ask those questions because you have to be responsible as an individual to make sure you're asking the right questions as well and not trusting people. This is a very important buy, right? And a lot of times people are just trust someone quickly and, because they're my friend, but they're not really educated on how to properly handle you. And then there's a mistake and now you had an issue buying a house. That's not what we want. So if you walk in and ask the right questions, even if they're new, they might say, man, I didn't even know to ask that. Go ahead. Come on. Like, yeah, that's my client want to know this. And now to give you a more advanced experience, a better experience, I would say. So that's it.
Clarence, I want you to speak to this real quick. I know you and I kind of talk about this all the time. But if you're a homeowner, right, and you're looking to move up to the next level of home, changing kind of your thinking as far as just selling a house versus keeping it and allowing that to generate a new revenue stream for you, some passive income.
Well, it's a lot of different ways of looking at it. And again, I don't want to sound like a lender, but when you're wanting to keep it, you have to make sure you can qualify for both homes on a situation like that. Sometime if you don't have a current renter. So if you bought it with the intent of a renter and there's a coverage, you are charging enough rent to not only make the payment, but cover some more expenses. I don't want to use terminology. I almost said it's called the debt coverage ratio, DCR, right? So you have to have a certain percentage of that rent that comes in to qualify for both homes. But let's say you don't, right? Let's just say, that you're desiring to upgrade your home, or I want to buy a new home, right? So one of the things that I recommend always is do an analysis of equity as though if you were going to sell it, right? So we're not putting it on the market. You just say, hey, come sit down with me. We're thinking about doing this in the next 6 months, 8 months, 12 months, whatever. I just want to do an equity analysis and see if I sold my house today, how much cash would that give me? And that will tell you your new buying power that you may now can put the 20% down, keep your payments the same or lower with a new rate and see what you can do if you were selling your home and trading up. But if you wanted to keep that, then you would have to find out, do I qualify for both properties? And if I don't, how much do I need to stick a renter in here to then make sure that it's offsetting my debt to income ratio so it's not charged against my payments? So as though you have two house notes. Because if you're paying $800 a month and you're getting $1,600 a month in rent, that's more than enough to cover the payment plus some. And a lender is saying, okay, I'm okay with that. But if you're charging $850, but your payment is $800 to the lender, that may be a problem if you don't make the income to qualify for both by yourself.
Okay. All right. And I got another question. I know Damien had the slide to kind of get his computer adjusted. Yes. So we'll kind of shoot some questions at you. Okay. What causes the market to slow down? We're hearing a lot of the slowdown. The market is, it was red hot during the summer. And now it's talking about a slowdown. What causes the market to slow down and how does that affect both the buyer and the seller?
Well, it's a couple of different things. One, fear of the market. The news puts out information. So that itself really would cause people to kind of start being afraid. Definitely interest rates, because that affects buying power. So you have to think at one point we were, had 3%, 3.5% interest rates and lower, but I'm just going to use 3%. So let's say hypothetically your payment was $1,200 of what you could buy at 3%. That payment went to 6%, 7%. Like, so that rate went to that amount. So now your $1,300 payment went to $2,700. Wow, right? And now that's a whole different ball. We ain't talking about another $50. So rates to do that, and also the economy itself, jobs, and how are people making income? That's really important. If you have a lot of people getting laid off or people losing their jobs, that could really change the environment of the market. And so those are some of the things, that could change.
Okay.
Inflation, also, affordability. So
All
that
right.
could be.
What would you say is a good rule of thumb as a buyer moving into that and going through this process? A good rule of thumb as far as you're asked, like things you can ask of the seller, ask the seller to do before you close on the house.
Okay. So, and every transaction is different. So we're just speaking in general, right? I
Right,
promise
right, for
you,
sure.
every transaction is 100% different, but it just depends on supply and demand, because there are certain pockets of the market, or if the property has been on the market a long time, right? Then there are more things you probably can ask for. Now, if it's a newer property and it hadn't been on the market that long and 9 other people are looking at that same property at the same time you are, well, you can't ask for a lot of things. And again, you have to be prayerful. You have to make sure you're doing your homework. I would never suggest anything you do to make you feel uncomfortable, but just to answer the question,
Right.
you have to make sure that supply and demand, if it's a lot of offers in, and you're probably not going to get a lot of the things you ask for, more than likely.
Okay.
So just taking that into consideration, it's all supply and demand. If there are more buyers for that one house, then less things you're probably going to ask for. If there are less buyers and no one has made an offer and you're available, then you're probably going to get more favorable terms and things like that from the lender. From the seller. Another thing, again, and this is a conversation you'll have with your person, or if you ever want to sit down, but also sometimes it's not important just to also get a lower reduction of equity if they won't come off the price per se. If they're willing to pay a lot of your closing costs, you can use that cash to buy the rate down, which will give you affordability to qualify for lower payment, but buy the same home you want. So again, there are some tools, some tips, some tricks that you can really get creative if the seller is willing to participate to still get you in that home, even though you didn't get 10,000 off asking, right?
Right.
But if you really wanted that home, and that was because $10,000 really knocking off a house right now won't swing your payment a large amount. But if you could take $10,000 and buy down 1% of the equity, that could really make a difference in the payment more than trying to knock 10,000 off the price of the house.
Gotcha.
So without trying to get too complex in rates and all that, but that's just an example. So
sure. And I was saving this question. I wanted to make sure Damien got a chance to chime in on this question. What variables should you look for when researching financial institutions?
no, that's a good one.
That's a good one. One, I mean, you know, have gone through the process before. Family, friends, be careful with that, because family and friends have different situations. I always tell people that just because, family member got this or dealt with this with one institution doesn't mean that that's what you'll deal with. You may have a totally different situation. Again, what a lot of people do, they look online to kind of look at the reviews. Clarence, I don't know if you've seen that, but I've heard that more often than not. Particular bank has bad reviews. But the biggest thing is I always tell people, check around with friends that have gone through the process, collect 2 or 3 banks that people that have used. That's the way that I would tell my son to do, is look around. Who are your friends? Who do you trust? They'll be honest with you about their experience. And you can, with social media, you can find pretty much anything.
Right.
Anything bad about a particular lender,
Yeah.
about a particular bank. I always say, me personally, I've only worked at big banks my whole career. But there's some great brokers. There's some great other lenders in this city. So I always say, just again, you can get confused trying to collect all the information. Find 3 people that you trust, 3 lenders that you trust, and just have at it. Just double check, because again, there are people that will call me because I'm in this space. I do anything from somebody buying their first home to somebody buying, their $3 million home. I do it all, right? But there are some people within my organization that all they focus on is the high end deals, right? I don't have that luxury because my folks run the gamut, all the way through. So there's some products that I know that because I've been doing this for a long time, I know as soon as I hear them say something, I know which products to take a client down. Another lender within the same organization may not be their product. So it really is who that has gone through the process and have them point you to the direction of those folks. Right. So not a technical answer. It's more just kind of a, what we typically do as folks, we find out who we trust and we ask them about their experience. So I do a lot of due diligence there if you're jumping into the market and just really finding out how their experience, type of products, and again, social media and Google is your friend.
And ask the right friends. Don't ask the crazy friends.
There you go. There you go.
I'm but I'm being honest. Ask the right friends too, because I mean that's important to who you're asking. So
yeah. Well, I know you're about to ask another question, George, but just to your point, Clarence, I've seen some friends that they like to see their friends stuck in a certain place, right? So,
yeah, ask the right friend.
So,
and don't ask and also ask someone who's recently had the experience, not someone possible. And I'm not saying you can't now. You want to get all information, but watch people who bought a house in 1990. Or they bought a house in early 2000. I can't believe you about to. That's too much. All 50,000 less. Like it'll get you a situation where it could be making you lose a home that you could have gotten. It would work well for you. Yeah. So make sure you're asking the right people and not people who are afraid or people who had a bad experience and now they're projecting their experience on you. Be careful of that.
Okay. And let me get this be the last question because I know we are far over our time today.
I'm here for you. If you good.
But question: how can you ensure you are receiving the most accurate and fair home appraisals?
Oof, that's a $1 million question. I have a personal opinion about them, right? I don't know where the baseline of the question's coming from, but I'm just going to put it out there. Appraisal is an opinion. Okay. It's a collection of, when you look at an appraisal, if this person, Lee, great question. If you've actually had an appraisal and you look at an appraisal, there's comparables. They line up 3 or 4 properties within a certain radius, usually within about a mile or 2, same square footage, same bedrooms, and they give an opinion of what they think the value is, right? My personal opinion, and again, the bank knows I feel this way about this, and I think there is when you start looking at certain communities and valuing certain communities, sometimes maybe that opinion just may not be accurate. I will tell you one neighborhood in particular that I saw when I was at a previous lender that they just could not understand Norwood. They just couldn't understand it. The appraisers were undervaluing it, and it took a while for it to start for them to understand. Right? It took some investors, some people that were willing to buy houses cash, where they were setting the price. Again, these are opinions of professionals that may not live in certain communities, giving an opinion on a property that you want to buy, Lee. So there is a process. Again, you want to make sure are you getting a fair appraisal? We cannot pick the appraiser as a lender. Clarence can't pick the appraiser. I can't pick the appraiser. We order the appraisal, and there's a round robin of appraisers that basically just kind of think about Wheel of Fortune. You kind of roll that wheel, and then bam, it lands on this particular appraiser. That person goes out there and looks at the appraisal. I don't see a lot of problems, but where I do see the problems where I see problems is when it's a community that is now coming back, where Clarence and I feel like this value is this. I know my grandma lived in these homes are great, but another appraiser may have a different opinion. So Clarence has to deal with that a lot, where he has to kind of sometimes, hey, let me show you why. Maybe you can't just look in Norwood. Maybe you need to go to Avondale or another part of the community where you see it transitioning and use those comparables. So you got to have somebody that's been in this for a while. Clarence not only is, seen it from the lending side, the real estate side, also he's invested, he understands that part, right? So it takes somebody like that to be able to talk to an appraiser and make sure that you are getting, if it comes in low, somebody that can go back and talk to that appraiser to make sure that they're seeing the whole picture. So that's the best answer that I can give you. That I always say, you're getting a fair appraisal. You're getting a fair appraiser based on their opinion.
Yeah.
So
And
if there's a follow-up question to that, I would love to hear it. If they want to call me directly, George, because again, I have my own personal opinion, but I know I'm on the clock as Regions. So I don't want to interject too many of my own personal opinions there.
And I'll just tell you real quick here to understand which side you're on. So when you're saying a fair appraisal, if you're the seller, one of the things you can do if you want, you could make sure you're removing certain things in your house. So, and again, that'll be if you want to have that conversation, we can explain. Make sure that you tell everyone all the updates that you've done, whether it be a roof, new air conditioning units. Like, make sure they know all the things that you've done to improve the property. That's very important. If you are the buyer, you do have the right to challenge the appraisal. Now, again, I don't know why as a buyer you would challenge an appraisal, because it benefits you on the buy side if it comes in low and they accept it, right? But as a listing person or a selling agent, you could challenge for the seller if it did come in short. But sometimes you have to make sure you take certain things. I mean, just the world we live in, because that's that person's opinion. And you have to be properly prepared that even as a seller, you could go and get your own appraisal for yourself so that you have the comps. Now, not saying the lender's going to use that, but at least you're educated enough to go in prepared for the appraisal if it comes up short. So that's just a quick answer to that as well.
Great point.
All right. Another question. Would you be able to get a list of professions that may qualify for the portfolio loan?
Yeah. There's we have a for attorneys. We have one. Are you asking me now, or can I can get that list? I mean, you want me to list?
Yeah,
that
if you want to, if you can answer now, or if you just can, email me the list, and I'll make sure we kind of put it on here so that they can get to it either way.
Yeah. So just real high level, we have one for young attorneys, doctors, and healthcare professionals. We have that. Now, there are some lenders that have it for engineers, et cetera. Now, some other portfolio products, you don't have to have a profession. You just have to be in either in a certain area or a certain income bracket. Okay. So most of our portfolio products that are 100% no money down or giving down payment assistance, you can't make more than $66,000 a year on those particular products. So, and those are outside of just the particular professions. It doesn't matter what your profession is for those portfolio products. So there's a portfolio product basically for everybody. Some of these professional products, there's some other bells and whistles if you're in those professions, but these other portfolio products are just as good a lot of times as some of those other professional products.
Okay. And this is a follow-up question to the appraisal question that we had. What are the recommended corrective steps if an appraisal has come in low or unfair, which we know race kind of sometimes plays its role in that, things like that? Like, what would you advise would be the next steps for that?
Well, if it's on the market and I'm the listing agent, right? Then again, I could challenge the appraisal. So we could go back and submit comparables that say, no, you didn't use this one, or why didn't we use this appraisal? Our square footage is this amount. That's why I was telling you, if you're the listing agent, one of the things we do when we take your listing is recommend that you do some pre-inspection stuff, right? Because I want to be armed. I never want us in a position of reacting. We want to respond. So it's important that you're already armed with information so that if it comes up, we're already prepared to address that and we know where we stand. And then once we can show that, we can insinuate, so why aren't you seeing this? Because here's what we have. Here's my appraisal I got from a certified appraisal 2 weeks ago. How are you coming in 40 short? And now it's egg on their face to justify that or make the adjustment. And they still could have the power not to. But again, just quickly, you can always ask that person, if it's not FHA, to go to another lender and get it reappraised. There are other ways we could work around if we need to get another appraisal back out. But again, just for the sake of the call, for the viewing here, you could challenge the appraisal. Okay. And that's what you could do. If I was your buyer's agent, I wouldn't dare tell you to challenge the appraisal because it puts you in a position to get the property for cheaper. So that benefits you. So if you're the buyer and you're like, my house didn't appraise, hey, take that house and go. If they're going to accept the lower price, 20,000 less, take it and go.
Right.
And thank God.
Okay. Last question. Clarence, I guess this is definitely directed towards you. Can you speak on the BRRR method for investment properties?
I got a lot of opinion on that. Now that's a whole call, but I'll explain it. And well, and it works. I'm not saying that. I think it's great to do it for short-term exit. So what he's talking about is buy it, renovate it, refinance it, right? Is that where we are?
Right. Yes.
So
Yes.
that's the abbreviation he gave us. So when you're buying a property for below market value, you know, you're going to buy it for 40, you're going to put 20 in it, then you can refinance it up at a higher amount, snatch the cash out, put equity in your hand, and have a tenant paying the note. Is that my understanding what you're asking about?
Mm-hmm.
So, but when doing that, you have to have an exit strategy on the opposite end, meaning like, okay, my buyer is still going to this person is they're going to have to buy this off of me. You know, I've refinanced in 12 or 14 months. I don't like that method. And again, this is my personal opinion, is because you could have 10 mortgages carrying too much debt. And if you're not financially smart to keep a lot of cash on hand, if people stop paying, because what most people, well, I ain't gonna say most, what some people have done in the past, they'll snatch all that cash out and they go to spending it. But you're still floating a $600 a note. Well, if that tenant stops paying, you're responsible to float the note. Or if an air conditioning unit goes out, depending on how you structure your lease and your rent, but you'll be responsible for making that payment. Well, if you have 2 or 3 of those come up and you don't have the money to make those payments, you can find yourself in foreclosure. And so that's the only method. Like it works, I believe, if you have a great exit strategy. I'm just doing this temporarily, or I'm very savvy enough to keep a lot of cash on hand, and I'm going to use those payments to make the payment down. Only thing I don't really like about it, like I said, it tends to keep you in a heavier debt situation than, you know, opposed to a traditional route. And it's some opportunity there. I like them now. I can do it, but you have to be savvy enough to know how to handle that type of method in large scale, you know. But it is an opportunity, and that it's really good to do. I like it, but be smart about it. That's all.
Okay. Any closing tips before we wrap this up for today?
I'll just say, honestly, like anybody who doesn't own a home, I'm going to challenge you to say, why not? And why not this year? Why not now? Right. And even if you don't answer that question, I want you to write that down yourself. It's like, why why don't you deserve a home? Right? You do. And so that's my one thing. The second thing, take massive action. Whether your credit is bad, whatever, there's always an opportunity to do something, whether it's taking educational courses, working on your credit, getting somebody to start helping you dispute stuff, challenge things, start working on making your payments on time, get on a budget, like take action and get in position to own a home. And I'm just going to tell you, and go and talk to somebody. You got in this situation by yourself, right? Don't allow yourself to try to figure it out to get you out of it.
Right.
Get with people who are professionals and stop self-medicating and go out here and get a home and become an owner and create generational wealth for you and your family. You deserve it.
Sure.
Right. Yeah, I would say lastly that, you know, I'm a big history buff George and Clarence. You know, I think back to, you know, why does this matter what we're talking about today? When this is Black History Month, right? This is
Right.
the second day. When they freed our forefathers, my great grandfather, when he was freed, he wanted a mule and he wanted 30 acres, right? Land and property has been something that's been generational, something that we've wanted for generations, and people fight for that. So again, just getting your piece of land, you can raise up generations. And again, it's what we do. It's our calling, but it's something that you can transform your family, your life, your future business endeavors, et cetera. So I just think it's something incumbent that we have to do is, again, to Clarence's point, why not now? Why not now? So
Right.
Clarence, great comment, man.
Right. Thank you, bro.
Well, man, I appreciate you guys taking the time to just drop such vast information. Told you all I was super excited about today because I knew the team that we had. But I do want to say this to everybody on the call, and Clarence has referenced it numerous times. there are several realtors out here. I know we have several between New Life and CRCC. Like, talk to them, strike up a conversation, go ahead and ask the questions. They've given you a bevy of questions, a good starting point. So get with somebody, start talking and start having these conversations. So like Clarence said, you can take that massive action to start moving in the right direction to get in the space that you need to be. We have gone way over the time that we were allowed, but it was good. It was good.
Yeah.
So I appreciate you guys stopping through. We will be back tomorrow. Tomorrow we will talk about investing from so many different areas, stocks, the stock market, things like that, like just different ways that you can invest, other ways that you can invest in real estate, just so many areas. We want to make sure this week that we hit the financial aspect from every area. So make sure you check us back out tomorrow. We will be here at noon. Thank you guys for tuning in today, and we will see you tomorrow. Have a great one.